Welcome back. You're watching Beyond the Headline. Now, India's economy grew by 13.5% in the April to June period this fiscal. The data was put out today. It's the fastest in a year, but we have to understand why. Double-digit growth is always welcome. It's great. The expectation was that we would grow at about 16% this quarter. That was an RBI projection, in fact, but we've grown at 13.5%. Now, why have we grown in double digits? This is a legacy issue of sorts because, remember, quarter one, that's April to June, 2 years ago was when we had the lockdown and the first wave of COVID-19. That's when the economy shrank by 24%. The next year, in that same period, it grew by 20%. And now, on top of that, has grown 13.5%. So if we break it down net-net, compared to pre-pandemic, the economy has come back 4% plus. So now what helped economic growth this quarter? Largely the service sector. People are spending more. There is more of the economy opening up as fears of COVID-19 are ebbing. Last year, this time, we were dealing with the Delta wave. So those fears are now going down, and that's really what's pushed the economy. So has agriculture. Agriculture sector, the farm sector has performed better than expected. Manufacturing is still weak at this point. Now, to break down these numbers further, I'm joined by Subhash Chandra Garg, former Finance Secretary of India. Mr. Garg, thank you so much for joining us this evening on Beyond the Headlines. Already, we're seeing this 13.5% figure being touted as a great economic achievement because double-digit, if you look at how the rest of the world is growing, 13.5% truly looks great. Double-digit is great. But put that into perspective for us.
See, 13.5% quarter on quarter for year on year for the last year first quarter looks on its own quite appreciable. But I think we need to see it in the context. We are recovering, we are not growing. As you mentioned rightly, 25% sort of decline in the year 2021. If you factor in all these decline and then growth, recovery last year and the recovery now, the 3 years growth or recovery, whatever you say, is only 3.3%. Now, if you have an increment of 3.3% in 3 years, growing at about 1%, this is not a great growth to talk about.
Having said that, compared to the rest of the world, would it be fair to say that India is faring better, fueled by our own domestic consumption? We are a consumption-led economy, and the fact that private fixed consumption has grown significantly, that should give us hope and optimism, isn't it?
Of course, we are 1.36 crore, 136 crore people, which is a very large consuming society. It should have a very large consumption effect. But the fact that still the government has to distribute food to 80 crore people doesn't tell you that they are consuming very high. And it's good that we have our consumption figures, which are now better than the pre-pandemic period by about 10%. But that's not the great growth. We need more consumption to come out of poverty. We need more consumption to grow better health and the better sort of prosperity for the country. So consumption story is all right, but it's not that good enough to be really feel very proud about.
Yeah. To cut to the chase, I think the big issue still continues to be manufacturing. And the pace at which capital is being formed, the manufacturing sector still seems a bit down in the dumps. In your view, what can be done to boost manufacturing further? Because that's where the virtuous cycle will begin from, right? More manufacturing, more jobs, more consumption, more economic growth.
So, rightly so, manufacturing is a very, very important constituent of the growth story because we have too many people in agriculture where they are trapped in poverty. We need to get them out of the agriculture in case we have any hope of making India a prosperous one. But see, again, even in manufacturing side, we are still not utilizing our capacity to the extent this is already built up, and therefore there is not much investment happening on the manufacturing side. There is some investment going on in the infrastructure, but on manufacturing, hardly anything substantial is happening. The gross fixed capital formation in this quarter is barely 3 or 4% above the pre-pandemic level. So the capital formation, which will give us the future growth, is is not very much happening. I think we need to get into a very serious rejig of our growth strategy. Our reforms are needed across the board, from public sector to private sector. We need to get our financial sector right. We have to get our investment right. We have to catch the digital revolution very well. We are not. There was number presented today of the electronics exports. While China makes $950 billion of electronic export, we do only $16 billion of exports. We are a very large importer of electronics. We're not investing into electronics very much. Even
Mr. Garg, but you know, some would argue that it's not entirely fair to compare us to China right now. And secondly, look at the PLI scheme for mobile phones, for example, domestic production of mobile phones, and how that's quite changed the picture. Would you say that's the case?
Again, it's a good story that a lot of manufacture mobile phones is taking place here. But we are at the lower end of the value addition. The real value addition is not taking much. We still import a lot of components for the mobile phones and all. And you have seen these news all around that it's basically the Chinese manufacturers who are here and who are manufacturing here, and in the sub 10,000 segment, they have as much as 85 or 90% share. So while some manufacturing is taking place, it's good that validation is taking place here. But on the whole, the manufacturing value addition, even in mobile phones, is not very great. Look at the semiconductors story. We are trying to get semiconductors here. We have one of the biggest PLI, about $10 billion in the semiconductor space, but Americans are doing $52 billion, Taiwanese, Chinese, and others all put together are doing $250 billion. We don't manufacture any semiconductor, whereas the world is far, far ahead. I think it will be very much necessary for us to do a very serious stock taking of where we are, what is required to be done, and then go about doing. In the PLI, which you mentioned, there's so many PLI for very small things, and we are spreading it too thin. And therefore, the PLI is losing the difference it was supposed to make.
Okay, so stock taking is required. India has grown at 13.5%. That number looks good, but we need to get into the detail of it. Long story short, we are recovering from post-pandemic, from a lot of global upheavals, but the pace of recovery needs to speed up further. Thank you so much, Mr. Garg, for joining us and putting that big headline into perspective this evening. Now,